With the stock market surging up 24.3% so far this year, a lot of people want in on the action. ETFs have once again become increasingly popular, and some of the funds are delivering monster returns. Some are even outpacing the S&P 500. So I did a video last week on the best Vanguard funds based on performance. And look, those are some great funds to invest in. I'm personally invested in a lot of them, but I also wanted to show you guys some alternatives, especially within the Invesco family, that I'm also invested in that you might not be thinking about. And honestly, you might be shocked at the performance of some of them. If you don't know, Invesco is the fourth largest ETF provider worldwide. They have more than 130 ETFs, and they have approximately 500 billion of assets under management within these products. So, like I said, as of filming this video, the S&P 500 is up 24.3% year to date, and if that holds or keeps going, it will be one of the best years on record. So the first Invesco ETF that is one of my favorites, and it has kind of mirrored the S&P 500 pretty closely over this year, although it's not really based on it, is up 24.5% year to date. To find this ETF, look for the ticker QQQ. It's an exchange-traded fund based on the NASDAQ 100 index, and the fund will, under most circumstances, consist of all the stocks in the index, and the index itself includes 100 of the largest domestic and international non-financial companies listed on the NASDAQ. And then the fund and index are rebalanced quarterly and reconstituted annually. So again, this fund is up just slightly above the S&P 500, and it has an expense ratio of 0.2. Moving into 2025, it's expected this fund will continue to remain on a pretty close trajectory to that of the general market, which is also expected to keep going up as interest rates are starting to come back down. But moving on, the two that I really wanted to show you, which are really exciting because they are far outpacing the NASDAQ, the S&P 500, and the Dow this year with returns that will make you wish you invested in these years ago. The first is Invesco's S&P Mid-Cap Momentum ETF, which can be found under the ticker XMMO. This fund essentially tracks the index of S&P 400 mid-cap stocks, and it has an expense ratio of 0.34. So a little bit higher than the other two. And are you ready for this? The fund is up over 45% year to date, which is an amazing return for less than 12 months. It's almost double that of the S&P. And honestly, it's even crazier when you think about it because most fund managers, let alone individual investors, cannot consistently beat the S&P 500. There's been multiple studies that prove this. But if you look at the performance of the fund over time, it has performed very well. Okay, but hold on, because this isn't even the best performing ETF of Invesco's that I wanted to show you today. The one that will probably get you the most excited is Invesco's S&P 500 Momentum ETF, which can be found under the ticker SPMO. This is a large growth fund, which started back in 2015 and tracks an index of 100 S&P 500 companies with the strongest volatility adjusted momentum. So it basically just tracks stocks within the S&P that have a high momentum score and has an expense ratio of only 0.13. But here's the crazy part. This fund is up over 63% this year, more than double the S&P, which is an insane return for less than 12 months. Since inception, this fund is up almost 300%. And look, while Vanguard, iShares, Fidelity, and other companies are very popular, especially in the ETF space, you definitely don't want to sleep on Invesco. Not only can it be a great portfolio builder, but for me personally, it's been a great investment. So again, definitely go watch my Vanguard video if you haven't seen it yet. You can now watch that video and compare those returns to the returns in this video with Invesco and kind of see which way you want to go. But anyway, guys, that's it for today's video. I would really appreciate a like and subscribe if you can. And thanks again for watching. I'll be sure to see you next time.